So I wanted to take a look at these consolidation patterns, these wedges, because we're getting into a wedge here in my bull trap scenario. But I just wanted to do just sort of a general look at these patterns. So as you can see, like an uptrending wedge, we don't even have to go anywhere. We have two uptrending wedges right here. So this one broke out to the upside. This one broke out to the downside. So just right there, uh, you can see that this could go either way. But we have another thing that happens is usually you are attacking the wrong side of the wedge and then break the other way. So yeah, zoom. Okay, so I mean here it's pretty clear you're just like hitting up, 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 and then reversal. But on this guy, it's not quite so clear because I mean you hit the top a bunch, you could have reversed out of here, and you hit the bottom a bunch, you could have reversed up here. It's not that clear. So if we go to our bull trap wedge here that we're in right now, I mean, we've hit the bottom of this thing a lot of times, and then just touched the top, and now we're coming back down to the bottom. So that could be a case, I guess, for the bull case to shoot up out of here. But this also is not, it's not the same type of wedge as this. This is a local wedge. This is not a local wedge. This top line is a super long-term trend line, and this is just the reaction line off the bounce. So I don't think there's anything in technical analysis really that would tell you which way this thing is going to go. But my bearish case is really just has to do with my macroeconomics, and it has to do with this credit cycle being a 3-month credit drawdown. So this is a 3-month credit drawdown in a bear market. So I just am not at all using technical analysis to try to see what's going to happen here, because it really doesn't tell you what's going to happen at all. I'm just using my macroeconomics to tell me that we are in a 3-month credit contraction right now, and I'm just making a bear case out of this wedge based on my macroeconomics. So of course I don't know what's going to happen, but it looks like we're going to come down here and test it, and then we might, well, what do we got? April 10th, right? So yeah, if we came down here, all the way down today, the 10th is Friday. So we could come all the way down here and then scream all the way up out of the top, possibly Friday, and then that leaves the whole weekend for that move to sit and all the news to come in about the oil situation and the health situation, and none of that really matters too much because it's just a time scale based on the length of the credit cycle, and I just picked this day because it mathematically just sits at the right spot to reverse down. This roll up is always gradual and the down's quicker in the bear case. So I mean, I guess the most dramatic thing here would be all the way down here and then all the way up out of the top here, maybe even go up a little higher and get crazy, and then the whole weekend it sits there up out of the zone, and then right on this line comes down. So this bear case is still holding now for sure. Um, and it would have to be more than a 1 day rally up out of here for me to even start considering a bull case. Um, anyways, that's my wedge. My wedges don't really matter that much. Technical analysis for determining the direction, they don't matter. But I mean, pretty clearly they do matter. This action is staying right in here. Pretty interesting. So I hope you enjoyed it. This is not trading advice. Please hit the like button to help me with the YouTube algorithm, and happy trading.